Hello, this is Brian Resney, President of Resney Wealth Management, bringing you an important update about the economy and the investment market so you can better your portfolio. You know, we continue to receive literally dozens and dozens of phone calls every single week from radio listeners, emails, and of course our radio show has just been record numbers of calls into our radio show. Our TV show that we're doing also is doing exceptionally well, and I'm glad that we are educating investors out there on really what to do with your money, and more importantly, what to avoid from conflicts from Wall Street and bad investment advice. I like to bring these update videos every single week for one simple reason. So investors can understand not only what we see in the investment markets, but also what we see in the world economy. The economy is slowly repairing itself. In the U.S., of course, we have muddled through GDP growth. It's not great, but it's better than zero. We look at all of our indicators, our recession indicators, our employment indicators, our growth of all the various sectors, not only in the U.S., but around the world. And one of the things that I stress to our clients all the time is we run a very disciplined investment strategy, which includes risk management. Most firms or most advisors actually don't manage money, and they don't include risk management. One of the hallmarks to what we do and the way our strategy works is really the strategy needs to be adaptive to changing economic conditions, meaning there's times you have a little bit more growth or maybe equity-based investments in the portfolio. There's times you're much more cautious and maybe shorter-term bonds, treasuries, possibly cash and so forth are in the portfolio. I can tell you right now we are seeing improvements in some of the emerging market economies. Of course, we are in those areas now. We continue to hold gold in our portfolio. I think one of the biggest risks that investors, not our clients, but non-clients are going to face is being on the wrong side of the fence. I am seeing more emotional investors who don't have an investment strategy and are blindly buying and selling investments based upon their broker recommendations or their so-called advisor recommendations with no real blueprint or investment strategy, which includes risk management. I can tell you from my 26 years managing money, if you're an emotional investor, and I said this a couple of weeks ago when I was on vacation on my video update, if you're an emotional investor, you will ultimately be a big loser in your portfolio and your retirement. You can't base your decisions on emotion. You have to follow a detailed investment strategy that can pretty much go anywhere, meaning it can go conservative when you need to be conservative, and it can be a little bit more growth oriented when you need to be. I fear that there's a lot of our radio listeners who are non-clients, of course, who are putting money in assets that are perceived to be safe, like a lot of long-term bonds or bond funds, and they're loading the boat on these investments and ultimately are really going to get hurt substantially. So remember, folks, all investments carry some volatility. I don't care if you have a conservative portfolio, you can see some short-term volatility, but it's your investment strategy that should dictate where you go, not your emotions. I look at the economy, I look at how our global tactical opportunity portfolio strategy not only has worked in the past, but is working currently now, and how I look at it working in the future. Your portfolio should be able to go anywhere, and again, be conservative when it needs to be based upon strategy and direction, and also maybe be more growth oriented when it needs to be. I ultimately believe the U.S. economy will repair itself. I ultimately believe the fiscal cliff will be dealt with, as I've talked a number of times, and I continue to see the emerging markets getting better. Now, while we own emerging markets in our portfolios right now for our clients, and we do own some China, we will be adding more China exposure as of tomorrow. And the reason we're doing that is we're starting to see that soft patch coming back off, and we're seeing more of a rebound in some of the China and emerging markets. I firmly believe that we will probably see an outperformance in some of those emerging markets. On our income side, we continue to be zero in long-term bond investments. In fact, the new clients that are coming in, we've been going through those bond positions and selling those bonds for people, making gain on the long-term bond. And we're going into other types of income-oriented investments like preferreds, like our emerging market bond exposure. Things that really have an opportunity to provide income that, in my opinion, don't have the risk of long-term bond exposure. We continue to get new clients every single week and month, And we're seeing more and more people today, especially that are working with the Wall Street brokerage houses, that are really getting just poor, mediocre advice. And we continue to see people that are being sold 10, 15, 20-year bonds in the lowest interest rate in history, because people are being sold what they think they want, not what they should have in their portfolio based upon current market conditions. And again, a lot of that has to do with a lack of investment strategy. So we're going to run our strategy. We're happy with what's going on. We're going to control major downside risk. Again, as I always tell investors, I don't care if you're conservative or you're growth oriented, 2 to 5% movements happen almost 20 times a year in all asset categories, not just stocks, but also in bonds and other fixed income, gold, currencies, oil. They all will fluctuate throughout the year. It doesn't mean you don't make money. It just means you're going to have to accept some volatility in order to meet your long-term goals. I firmly believe we're going to end on a higher note by the end of the year, and I firmly believe we'll continue to add new clients to Resni Wealth Management. Of course, if you're a client, please give us a call if you have questions. And if you're not a client and you want a real investment strategy that includes risk management and severe down markets, please call our office for a consultation. We always like taking on new clients who want to better their situation. Make sure you listen to Sunday's show, and if you missed our TV show last night, they're going to have a replay of it this Sunday at 7:30. Have a great and profitable week.